Good day, ladies and gentlemen. Once again, we are still busy with the topic of impairment loss or impairment of an asset. Then it says B Text Ltd is a small listed producing stationery company. But before we go into that stationery producing company, let us know what we are required first. We are to use the supplied table and calculate the values of the machine. Then it says on the 31st of December 2006, we must calculate the actual carrying value and the historic value, and that is 2 marks that need not to be missed. Then after it says we are required to calculate at the end of December 2007 the carrying value and the impairment loss, meaning there is an impairment loss that is taking place at this stage, which we will see that from the information provided. Obviously, that means if we have an impairment loss, that means the carrying amount is more than the recoverable amount. That is why there will be impairment loss at the end of the year 2007. So at the end of 2008, it is clearly also stated that the actual carrying value, we are to calculate the actual carrying value and the impairment loss or reversal. So there is a potential on my viewpoint already of the reversal because there was impairment loss in the previous period. But remember, this reversal of the impairment loss must be limited to the carrying amount of the historic column. I emphasized that in the previous question. Now this is what I will be applying. And they say if the recoverable amount for the year 2008 is 180,000 rands. So take note of this. Our RA is 180,000 rands, which is a recoverable amount. That is where the RA comes from, recoverable amount. Now let us then continue now with this question, knowing that we are provided always with the table actual carrying value and historic carrying value. But it will be more presentable when you're writing exam than mine that I've written there. It says BTEX Limited is a small listed company producing stationery. The financial year end of this company is 31st December each and every year. They close their accounting period. A machine was acquired on the 1st of July 2005 at a cost price of 350,000 rands. That means now when we account for the depreciation for this machinery, we need to be aware of the fact that it was bought 6 months before the end of the year, which is from July up until December. So now depreciation will be for only portion of the year. At a stage of the estimated useful life at that stage, it was useful life for this machine. So useful life is the estimated lifespan for this asset in the business, and the estimated residual value is 50,000 rands. So now depreciable amount will be 300,000 rands, because cost of 350,000 minus residual value gives us depreciable amount of 300,000 rands. Then we divide this by 6 years and we multiply it by half, or 6/12. Then we get a depreciation only for 1 year. But please note that the cost of this asset first needs to be recorded before the depreciation is accounted for. So now we say cost, and the cost is at 1st of July, the 7th month, 2005. The cost is 350,000 rands, and the cost is 350,000 rands, also under historic. Then we'll have a heading that says depreciation. Depreciation, we know that it is 25,000 rands here. Then obviously here it is also 25,000 rands. Now we don't calculate the balance after this unless there was a change in estimate. Now in this case there was no change in estimate, but let us read what we are provided. So this is what took place in the year 2005. Let us look in the year 2006. They say on March, or the machine was revalued on the 1st of January 2007, meaning the whole 2006 nothing happened, things were normal. So that means we need to calculate now depreciation for the year 2006. So I should have said here again, be consistent with my recording, year 2005, then after we have year 2006, then depreciation for the year 2005, 25,000. So I'm just transferring this here now. Then after we have depreciation for the year 2005, still 25,000. I should not have written it there on top. 2006 depreciation obviously will be 50,000 rands. Obviously it will be 50,000 rands because 25,000 is for half of the year. So now this will give us depreciation, or sorry, the balance at the end of 2006, which is beginning of 2007. Then after, please don't hesitate to show your workings at all. Your workings are very much welcome. 350 minus 50,000 divided by 6. Same applies here. 350 minus 50,000 divided by 6. That is the procedure. That will give you 50,000 rands. Then now we get to what we call balance. We only say carrying amount at the end. Balance at what? Balance at 31st of the 12th month in the year 2006. Then now that will give us 75,000, obviously. 350,000 minus 75,000 rands. Very easier. We get to 275,000, and we do the same thing both sides, under historic and under actual. We only change, remember, our actual when there is a revaluation or if there is an impairment, but we keep our historic column as a historic column. Now at this point there is a change in estimate, hence I'm also changing the color of my writing. Now at this point, remember, we are sitting where at the end of December 2006, a day before the 1st of January 2007. So these 2 dates are the same, at the same carrying value. So now that is why we can compare the two and have our revaluation at that point in time. Now we 275,000 and 275,000, just wanted to verify something. Then now we are at this point in time where we are told 1st of January, a day after the end of 2006 accounting period, the machine was revalued at 310,000 rands with an estimated remaining useful life of how many years? Of 5 years. Remember, how many years are gone? Is 1.5 years are gone. So meaning, if they say the remaining is 5, meaning they added half a year, meaning they could have said the total useful life is 6.5 years. They could have said that. Then you know that if they say 6.5 years, you need to minus half a year, that's 6 months, half the entire 2006, then now you minus that 1.5, then you are left with the remaining useful life, which is 5 years. This is only for the actual column, not the historic column. Now let us continue on that same note. Now there's this revaluation of 310,000, meaning the value of our machine after the revaluation must be 310,000. So immediately you skip one line, you write 310,000, then you know that the difference must be the revaluation. Then we have 310 minus 275. We are definitely that 35,000 is the value by which this machine that manufactures stationery has increased by. Remember, we don't do anything under our historic column because this transaction is taking place at the same date, which is 1 day after. So there's no need for you to calculate depreciation at this point in time because it's just 1 day difference. So we only do that depreciation under our historic column at the end of the accounting period. So now here we'll just have to write and say revaluation. Then our revaluation is 35,000. There we have written our 35,000 rands. Then now we get to our balance after the revaluation, meaning this was balance before the revaluation. I always say that you can't write it before time because you don't know that it is before. But the minute now you're like, oh, there's the revaluation, then you go back, you open brackets there, you say balance 2006 before revaluation. Then after now here you start by saying balance after the revaluation. We have balance at 1st of January 2007. Then now at this point in time we need to check now what information have they provided to us. Then they say now at 31st of December 2007. Please know where you are in terms of the dates. Where are we? We are on the 1st of December 2007. So now the minute they say at 31st December 2007, meaning depreciation still needs to be accounted for the year 2007. So now we need to account for depreciation. Depreciation. Then our depreciation is for a specific year. Always we specify and say year 2007. Depreciation after that to specify for which year and for which year all the time. Then we have depreciation for the year 2007. Remember, nothing changes under historic. Depreciation under historic remains certain amount of 50,000 rands. Nothing has changed. Is the same depreciation for the full year, which was 350,000 minus a residual value of 50,000. Then after we divided that by the useful life of 6 years. Then now we have the revalued asset. Remember, under our actual, that revalued asset, which is 310,000, had a new residual value. The new residual value was 40,000, don't forget, and the remaining useful life was 5 years. So now when we're calculating depreciation under actual, we need to be aware of that change. Therefore now it will be the current revalued of the asset, revaluation value of the asset minus 40,000 rands, and we divide by 5 years. Very easy, very simple. Now that will be all. Now please do show all these calculations, but due to limited space for me, then I'll just show you how I'm calculating that in my calculator. 310,000 rands minus 40,000 rands, we get to a depreciable amount of 270,000. We divide it by the remaining useful life, we get to 54,000 rands as our depreciation under the column called actual column. Then at this point in time, we can draw our line. Draw our line. What do we get after? We get into a balance. We get into a balance. Where is this balance? At 31st of December 2007. What did they say to us at 31st of December 2007? They said at 31st of December 2007, an impairment test was done, and it was established that the machine had a net selling price of 200,000 rands and a value in use of 180,000 rands. So now what do? We need to impair our assets because they've already tested for impairment and they established that there is definitely an impairment, meaning the carrying amount of our asset was greater than the recoverable amount of our asset. Therefore, the difference will be an impairment. Now, remember, we need to say our recoverable amount is the higher of the value in use and the selling price, of which the selling price is the bigger one. Then we take the selling price as the recoverable amount. So our recoverable amount becomes 200,000 rands, and we look at our carrying amount at this point in time. Our carrying amount is how much? It will have to be 54,000 minus 310,000. How much do we get? It gives us 256,000 rands. Then, not forgetting the column for the historic minus 50,000 rands, we can say that we're getting 275,000 minus 50,000. How much do we get? We get 225,000. So now this is 225,000. Now that we have 256,000 as the carrying amount under actual column, remember this is actual carrying amount, as the carrying amount at the end of 2007. We compare this carrying amount with what? We compare it with the recoverable amount, and we discover that the recoverable amount is less than the carrying amount, or the carrying amount is more than the recoverable amount. Therefore, the difference of 56,000 will be an impairment. 56,000 is an impairment. Then obviously the balance after the impairment will have to be 200,000 rands. It will have to be 200,000 rands. Therefore, now we have our impairment. We have our impairment loss. We have our, remember this is an impairment, and our impairment leads to the carrying amount and our actual to be more than the carrying amount according to the historic column. That is not a problem, and I'm highlighting that the carrying amount after the impairment has been taken into account is less than the carrying amount in our historic column. But now look at the next statement, at the next step. What do we do after? Remember, at this point in time, the 200,000 rands is at the same date as that carrying amount. So we are not doing any changes under our historic column because this is not at the end of the year. The impairment is taking place at the end of December. So now remember, impairment is an expense. Now impairment expenses, we know that they increase on the debit side. So now if you are recording a general journal for this, you'll have to debit your impairment and you credit your accumulated impairment, your accumulated depreciation and impairment loss, or your accumulated impairment loss. So now know that it will be debited impairment loss, then you credit your accumulated depreciation and impairment loss. So that will be how we get now to the balance at the end of December 2007 after the impairment loss has been taken into account. So now this is the balance at 31st of December 2007 after the impairment loss has been taken into account. Now there was an assumption. There was now an assumption. There was an assumption, and the assumption was in our requirements. Remember, these are at the end of December 2007. There was information provided in the requirements, meaning now we are approaching the last question in simple terms. Very important. They said December 2008. What happened here? They say the carrying amount or the carrying value, calculate the carrying value and the impairment or reversal of the impairment. If the recoverable amount is how much? 180,000. Where is this period at the end of December 2008? And where are we in our recordings? Take note, we are at the end of December 2007, meaning we need to take into account the depreciation for the 2008 accounting period first. Don't forget that from one year to another year, the difference is called depreciation. So now our depreciation is for the year 2008. Is for the year 2008. Your heading is depreciation. Your line item is year 2008. Then now remember, history does not change. It remains history. So depreciation under history remains 50,000. Therefore now the carrying amount under the history column will be 175,000. And if you see that I am first recording that one because there is a limit. If there is a reversal of the impairment, it must not exceed. We are talking about the reversal of the impairment. It should be such that the reversal of the impairment does not make the carrying amount under our actual column to be less than the carrying amount under historic if it's the reversal of the impairment that took place previously. Remember, previously we had an impairment loss of 56,000. So let us then now continue on that same note. Then we have to calculate depreciation now in the old method, of which in the old method we have 200,000. Then now we need to know that, remember, 200,000 now is our new valued amount, which is according to the impairment that took place. This is our recoverable amount now, which is 200,000 minus 40,000 rands. So in other words, we take our recoverable amount now to be our cost price. 200,000 minus 40,000. Previously we took 310,000 because this was the revaluation, but this was the value of the asset after there was a test of the impairment. Previously we took the 310,000 minus that with 40,000 divided by the useful life of the remaining years, which was 5 years, if I still remember very well. So now that there was a change in terms of the RA, therefore now we take the amount of the RA using the reallocation approach. We use the amount of the RA, which is 200,000, minus the residual value. Remember, residual value did not change at this point in time. Residual value did not change here. They did not say anything about the change in the residual value, and they did not say anything about probably the change in useful life. So we know that 1 year is over because the remaining was 5 years. Remember, previous year, which is the year 2007, we had the remaining 5 years, and we calculated depreciation for the year 5, which is for the year 2007. That means the remaining years now for 2008 is only 4 years that are left. So that is why now we'll divide this by 4, not by 5, because at this point in time 4 years are left, no longer 5 years that are left. So now 200,000 minus 40,000 residual value will give us a depreciable amount. Divide by 4, we get to 40,000 rands of our depreciation. And this question, guys, is very important to master all these dynamics. Reallocation approach. Now, previously I want to highlight we took the revaluation amount as our cost price. Then in this case we take the recoverable amount as our cost price. That is the reallocation approach. But now we deal with the remaining useful life, always with the remaining useful life. Remember, 2007 we had 5 years remaining. Now we are in the year 2008, therefore now that will mean in the year 2008, meaning what is left is 4 years instead of that 5 years that was re-estimated. So we have mastered that. We need to first get to our carrying amount, which is our balance. Although now I have very limited space, I do not know this will end up like this. Balance at 31st of December 2008. Let us look at our balance. How much? 200,000 minus 40,000 rands. We get 260,000 rands. We get 260,000 rands. Now we are told at this point in time, end of December 2008, there is a recoverable amount. How much is that recoverable amount? The recoverable amount is how much? 180. 80,000 rands. Now, if our recoverable amount is 180,000 rands, we cannot be able now to, or this is our RA, meaning our recoverable amount, it is 180,000 rands. And how much is the carrying amount of the asset? The carrying amount of the asset, it is 160,000 rands. Now we look at 160,000 rands, and we also look at 180,000 rands. Now in this case, what are we doing? In other words, meaning now we are comparing the carrying amount, which is 160, with the recoverable amount, which is 180,000. And when we test for impairment here, there is no impairment, but there will be a reversal of the impairment of the previous year. Now when we reverse the impairment of the previous year, it should be such that our carrying amount after the reversal should be not less than the 175,000. Meaning now we need to say how much must be reversed such that when we add it here, it becomes 175,000. Obviously, the amount of the reversal, we can't reverse the entire 56,000. No. And by the way, if we say the difference between 160 and 180,000, look at that, 160 minus 180, 1 would be like, then let us reverse 20,000. Know that 20,000 out of the previous impairment. We can't reverse 20,000 out of the previous impairment. We can only reverse 15,000, so that our carrying amount in the actual does not exceed the carrying amount in the historic. Do you see that? Because our RA is 180,000. We have 180,000 rands. Our carrying amount, it is 160,000. I don't know why I said one. It is 160,000. Then if we say 160 minus 180, we get 20,000. So now we can't make a reversal of a total of 20,000, because if we add 20,000 here, it will be 80,000, which makes it more than 175,000, of which we need to keep our reversal not to exceed the 175,000 of the carrying amount in the actual column. That is why now the impairment reversal, as I'm closing, the impairment reversal will be 15,000 rands. Remember, this becomes positive. So now 160 plus 180,000, it will give us 175,000 rands. So that our carrying amount in the actual column after the reversal of the impairment is not more than the carrying amount under the historic column. So that is the importance. Hence now we limit this. In other words, we say no, our recoverable amount cannot lead us to an amount of 180,000 that is more than the carrying amount according to the historic column. So guys, with that, I think I've made myself very clear on that. It's a very important note when it comes to the reversal of the impairment, that it should be such that when we reverse the impairment, it should not lead to our carrying amount being more than the carrying amount in the actual column. Therefore, now in the last part, you'll have your carrying amount. You'll have your carrying amount after the reversal, and under actual it will be 175,000. Then under historic you're still left with 175,000. So this is the end closure of the continuation of what we dealt with at this stage, after we added the 15,000 only of the reversal. With that, guys, thank you. You've been wonderful and awesome.